Deciding to buy a house and become a homeowner is an exciting prospect and a pivotal life transition. In today's competitive climate of bidding wars and houses selling above the asking price, it can also be a bit daunting. It surely pays to learn about the mortgage process so that you're ready when the right house comes along. So, today's video is about how to get pre-approved for a mortgage so that you can make your home purchase with confidence. So what does it mean to be pre-approved for a mortgage? Pre-approval for a mortgage means that a lender has looked at your financial history and they've determined how much money they are willing to lend you. This can give you a huge advantage when you're out looking for a home because you'll know exactly how much you can afford to spend. Sellers will also take your offer more seriously if you have a pre-approval letter in hand. When a mortgage lender pre-approves you, they're stating they would be willing to provide you with a loan of a specific amount. It's a tentative declaration that isn't a commitment, but it tells you the lender determined what your finances are and feels comfortable loaning you the specific amount listed in the pre-approval letter. That number gives you a ballpark range of what you can afford when you shop for a house. But is pre-approval required? Generally, no, but some sellers may require it. Pre-approval shows house sellers that you're a serious buyer, and if you're shopping in a competitive region, being pre-approved can give you a leg up. Many people ask what kind of documents are required to get pre-approved for a mortgage. Getting pre-approved is pretty much similar to applying for a mortgage. Every lender will have slightly different requirements, but you can expect to be asked to provide the following information: Social Security number, address, proof of income and employment information, recent W-2 and bank account information. You might also ask, how is pre-qualification different from pre-approval? Well, pre-qualification is much easier and more informal than pre-approval. Pre-qualification requires only basic information. In fact, some lenders may not even need to pull your credit report to pre-qualify you for a loan. Pre-qualification primarily benefits you, the buyer. It can help you understand your mortgage budget and how much you can afford to borrow, so you can set your expectations when you begin shopping for a house. Pre-qualification typically requires sharing the following information with a lender: income, assets including savings, expenses, debts, and credit score. With that information, the lender should be able to give you a rough idea of how much of a mortgage loan you might qualify for. Use it as a gauge rather than a sure thing. You might be wondering, how long does the pre-approval process take? The length of time for pre-approval will vary by lender. You could have an answer in less than 24 hours, or it could take up to 2 weeks. But most lenders will let you know if you're pre-approved within a few business days. How long your pre-approval lasts will also vary by lender. Generally, you can expect you'll need a new pre-approval after 90 days. However, it's important to understand that pre-approval isn't a guarantee of a specific loan amount, and the further you get from your initial pre-approval date, the more likely it is that changes to your finances might lead to a change in terms. For example, maybe you forgot to pay a hefty credit card bill, and your credit score took a hit, which no longer qualifies you for your pre-approved interest rate. Even if your pre-approval hasn't expired, the loan terms you get when you apply for a mortgage could look different from the deal you were expecting. Now the next step would be to look for a good loan officer. Word of mouth, talking to friends, and consumer reviews are good ways to find a trustworthy loan officer. If you're using a realtor, that person might have a relationship with a loan officer that they can vouch for. Ideally, you should try to get pre-approved with multiple lenders to see what kind of rates and offers you can get. But are large loan companies trustworthy? Yes, they generally are. It's certainly fine to use larger companies like Rocket Mortgage or Better Mortgage. They may have more modern conveniences than smaller companies have, such as a faster approval process, for example. Just like any option, make sure you know what you're getting into and compare options whenever possible. So there you have it. The process of getting pre-approved for a mortgage may seem daunting and time-consuming, but it's worth it in the long run. Just remember to do your research and compare offers from multiple lenders before making the final decision. It is always best to consult with a financial advisor to ensure you are making the best decision for your individual circumstances. We are making lots of useful videos like these that are sure to benefit you, so please subscribe to our channel. Thank you for watching Think Tank Financial.